Thank you, operator, and thank you, investors, for joining the call today. This is Henry Albrecht, CEO of Limeade, here to provide you with an overview of our business and financial results for the half year ended 30 June 2021. Joining me on the call is Limeade CFO Todd Sparks. On slide 2, it's important to notice this notice and disclaimer for today's investor call. Investors should note that certain statements in this document constitute forward-looking statements and comments about future events, including the company's expectations about business performance. On slide 3, the agenda, I will provide a brief overview of Limeade and the market we serve. Todd Sparks, Limeade's CFO, will then present the first half 2021 financial results. Following the presentation of financial results, I will discuss the Limeade growth strategy and outlook for the rest of 2021. We will then be more than happy to take your questions. Slide 4. Turning to the company overview, Limeade creates immersive well-being solutions for a healthy employee experience. As will be discussed later in the presentation, Limeade continues to invest significant resources in differentiated technology that positions us both as a leader in well-being solutions and a pioneer in employee experience platforms. Some of these components include world-class employee listening, artificial intelligence-powered personalized communications, integration in the daily flow of work, and a consumer-grade experience guided by Limeade Institute Science. Slide 5, market landscape. Our leadership in well-being and differentiated focus on employee listening are critical to addressing the evolving needs of the employee experience market, which is conservatively valued at $22 billion USD, with a compound annual growth rate of 22%. The COVID-19 pandemic has accelerated many trends relevant to the future of work, and a return to traditional work experiences is unlikely. First, most large companies like the ones we serve are grappling with increasingly remote global workforces. Second, employees are dealing with unprecedented levels of stress and anxiety and are expecting support. Finally, healthy employee experiences are essential to attracting and retaining millennial and Gen Z or Gen Z talent. These are the issues that Limeade is passionately engaged in solving. Before we review our financial results in detail, I would like to take the opportunity to say we're pleased with the company's performance during the first half of 2021. As you will see, in the face of ongoing challenges, we've managed to keep our core direct business with large North American enterprises stable, while also making significant progress on several value creation initiatives. These include a significant restructuring of our indirect channel strategy, a major partnership with Microsoft, the significant acquisition of TinyPulse, and progress in R&D that will increase our leadership momentum in our core market. I will now turn the call over to Limeade CFO Todd Sparks, who will go over the first half 2021 financial results starting on slide 6.
Thank you, Henry. My name is Todd Sparks, CFO of Limeade. Turning to slide 7. During the first half of 2021, companies were still struggling to adapt to the decentralized workforce trends that have been accelerated by the COVID-19 pandemic. The change in business priorities for many companies, combined with the significant resources required to manage daily responses to COVID-19 related issues, resulted in a challenging environment for new enterprise software evaluations and implementations. Despite these factors, Limeade performed well and successfully executed several value creation initiatives that today will allow us to reiterate our full year 2021 guidance. With regards to first half 2021 performance, first half 2021 revenue was $26.9 million, down 4% from first half 2020 revenue of $28 million. Recurring revenue was 94% of total revenue, down from 98% in the first half of 2020. Limeade added 6 new contracts during the first half of 2021, compared to 7 new customer contracts during the first half of 2020, finishing the first half of 2021 with 149 total customers, down from 175 in the same period last year. Notably, of the net customer decreases, 24 of the 26 came from the indirect channel. while the direct channel business was stable. We'll talk more about both direct channel momentum and actions we're taking to improve the indirect channel a bit later in the call. Limeade gross margin for the first half of 2021 remained strong at 76%, down 1% from the same period last year. The company's net revenue retention was 93% for the first half of 2021, down from 98% in the first half of 2020. Again, this decrease is due in large part to changes we're making in our indirect reseller channel, which we expect to result in higher retention in the long term. Limeade average CAR was $616,000 per direct well-being customer, down 4% from the same period last year. But average CAR per customer was up 9% over the first half of 2020, from $323,000 to $352,000 per customer.
If I may, Todd, I would like to take the opportunity to add some additional color. This is Limeade CEO Henry Albrecht. In an extremely challenging environment for enterprise software companies and especially for employee benefits departments, we not only maintained performance that was only slightly down from the same period last year, we also successfully executed several value creation initiatives, including a more disciplined approach to our indirect channel, significant new partnerships, and a major acquisition that will greatly impact our differentiation and thus our competitiveness in the well-being and employee experience market segments, which we expect to show up in our second half 2021 performance.
Great points. Thank you, Henry. Turning to slide 8. Limeade's direct channel revenue was stable during the first half of 2021, down just 2.4%. In fact, half of the $1.2 million revenue reduction and 24 of the 26 net decrease in customer count occurred in the indirect sales channel. Turning to slide 9. Slide 9 highlights our highly diversified customer base with an industry view on the left and customer concentration on the right. Limeade has a highly diversified customer base with minimal reliance on any single customer or industry. As of 30 June, the largest Limeade direct customer represented 10% of CAR. The next 4 largest represented 18%, and all the other customers represented 71%. Turning to slide 10. Finally, slide 10 demonstrates our commitment and ability to exercise operational discipline. Limeade enjoyed a strong cash position of $28.7 million as at 30 June 2021. The pro forma cash balance as of that date was $19.6 million after accounting for the acquisition of Tinyballs. The company's strong cash position is a direct result of effective expense management in uncertain times without sacrificing the company's ability to scale with key R&D investments. Limeade also made key leadership hires during the first half of 2021, which strengthened the company's operational capability and contributing to the strong cash position. With that, I will now return the call to Limeade CEO, Henry Albrecht, who will discuss Limeade's strategy and the outlook for the rest of 2021.
Thank you, Todd. On slide 11, I'm particularly excited to discuss our growth strategy and some of our major initiatives. Turning to slide 12, simply put, the events of 2020 and 2021 have clearly demonstrated that well-being is the heart of employee experience. Therefore, the core of our growth strategy is to solidify our leadership in the North American enterprise well-being market while bolstering the immersive capabilities of our solutions. We are in a strong position to do so with a great product market fit and a sales pipeline valued at $156 million as at 30 June 2021. This includes a very strong late-stage pipeline. With regards to bolstering our immersive capabilities, I'd like to highlight our recent partnership with Microsoft. Limeade will be embedded in Office 365 and Microsoft Teams through Microsoft Viva, the company's employee experience initiative, allowing us to show up in the flow of work. This places Limeade in the flow of work on the world's most used productivity platform. Furthermore, the recent Limeade acquisition of TinyPulse significantly increases our employee listening capability. This is critical to our increased differentiation and competitiveness in the North American well-being market. The TinyPulse acquisition also provides us with long-term growth opportunities in the form of providing consumer-grade experiences directly to the mid-market, and comes with a 40-person Vietnam-based research and development team, which we expect to grow in the future. Our enhanced R&D capability will accelerate our platform optimization initiatives, mostly geared towards enhanced speed and performance for global enterprises. To be clear, Limeade has nearly doubled our engineering horsepower. Finally, one of our primary value creation initiatives for 2021, which is well underway and apparent in the financial results Todd shared today, is the optimization of our indirect channel. Limeade is moving away from underperforming resellers who have attracted customers that are not aligned with our ideal client profile or strategic growth plans, and who frequently divert resources from our core enterprise well-being market. Therefore, we are focused on rebuilding a stronger, more aligned version of our indirect channel by focusing on enterprise class partners. Moving to slide 13, we expect our disciplined focus on North American enterprises to result in 2021 CAR growth. The size and quality of our current sales pipeline and the historical second half weighted seasonality of our business points to new customer acceleration in the second half of 2021. Furthermore, our acquisition of TinyPulse will have a direct and immediate impact on CAR. We expect our major partnership with Microsoft Viva to elevate our exposure, brand equity, market leadership, and future sales opportunities with enterprise buyers. Moving to slide 14, as I mentioned at the beginning of this conference call, we are pleased with Limeade performance during the first half of 2021. We not only achieved stable performance in our direct channel to North American enterprise companies, we also made significant progress on the value creation initiatives, such as upgrading the quality of our indirect channel, partnering with Microsoft, acquiring TinyPulse, and otherwise increasing our differentiation and competitiveness with an unmatched employee listening capability and immersive well-being solutions. We maintain strong customer relationships, and our business is highly disciplined and flexible on cost management. Listening has been a theme today. We listen to our users and are giving them a high-performing, consumer-grade experience. We listen to our customers and are providing immersive well-being solutions to help build healthy employee experiences. We listen to expert industry analysts and are sailing with the tailwinds of technology and the future of work. We listen to our investors who seek not just growth in the massive but seasonal enterprise well-being market, but also growth and diversification in the large and more predictable mid-market. We are pleased to reaffirm our revenue guidance for the full year of between $50 to $53 million, EBITDA loss for the full year of between $5 and $8 million, and net loss after tax of $7 to $10 million. Moving to slide 15, this concludes the formal presentation. I would now like to hand the call over to the operator for the question and answer session.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Seth Hoskin from Canaccord. Please go ahead.
Thanks, operator. Morning, Henry, and morning, Todd. Or afternoon for you guys. How's it going?
Great. Thank you, Seth.
Just a couple of questions from me. Just wanted to expand really on the commentary around new customer acceleration expected in the second half and the pipeline having a number of strong late stage pipeline. Just trying to frame this, I suppose, in terms of such a, the strong seasonality in the second half. Are we expecting kind of a, new customer adds not quite as good as the second half 19, but better than 20? Just trying to frame kind of what the second half is going to look like given where the pipeline is.
Yeah, I'll start with a couple of comments, and perhaps Todd might add on to that. I would say, for investors new to the company, which there may be some on the call, this is a highly seasonal business with the vast majority of our revenue and contract signings occurring in the second half of the year. And we absolutely expect that to be the case this year, not just in terms of number of customers, but in terms of CARR, or contracted annual recurring revenue, as well. And to me, there's also the theme of, without spending too much time on COVID, which I'm sure we're all tired of hearing and talking about, there is a return to spending on platforms like Limeade. There was a retrenchment that we see coming to an end. The retrenchment was related to benefits budgets being frozen or under fire, but the long-term tailwinds we've discussed since March of 2020, when COVID shut down a lot of our pipeline and opportunities, we feel is returning quite strongly in the second half of the year with some significant opportunities that we will hope and do our best to close.
Cool, thanks. And you're saying that, sorry, Todd.
I was just going to agree absolutely with everything Henry said.
Cool, thanks. And you're saying that also, I suppose, probably more in terms of FY22, but on the existing customer upsell, like, are we expecting a bounce back in NRR towards that sort of 98, 100% level for the direct channel?
I think that's
I would be surprised. Go ahead, Todd. You want to take that?
I was just going to say that, we certainly look to drive to 100% and beyond, in the longer term. We're absolutely working on our stickiness. We're absolutely looking for vehicles to create upsell opportunities with our existing customers. And those two initiatives we're undertaking with an incredible focus and attention. But it's going to take some time for those to roll out. And so I would say in the nearer term, I would expect us to kind of bounce around in that same kind of high 90s NRR for the direct channel.
Cool, thanks, Todd. And then just talking on, I suppose, the industry landscape, it looks as if a lot of consolidation has taken place over the last sort of 12 to 18 months. Could you make any comments in terms of how the inquiry levels for M&A, I suppose, both inbound and outbound have been?
Yes. Obviously, those are typically highly confidential discussions, but I think I can share that we do receive inbound inquiries about the company, about strategic partnerships and M&A. Obviously, our core focus is on our business and returning it to the growth that we know will be associated with value, not just for our customers, but also for our shareholders. So I would say we do absolutely receive inquiries, and yet we remain focused on growing the core business.
Cool. Thanks, Henry. And then just finally, in terms of the guidance, are you able to provide any sort of additional color in terms of the contribution from TinyPulse in terms of both revenue and if it's EBITDA loss making?
Yeah, I can provide a little color. The guidance that we provided is really GAAP guidance. When we acquired TinyPulse and we had our initial call to kind of bring everyone's attention to it, we did mention that there was $6.5 million of continuing revenue. We purchased TinyPulse at the end of July, so there's only about 5.5 months of contribution. And also, the deferred revenue balance of TinyPulse is going to have to, per GAAP, have a deferred revenue haircut to account for the cost of delivering the service. So when you get into those reductions for the fact that it's less than half of the year and the deferred revenue balance that we acquired is not going to be recognizable, or at least a significant portion of it, you start to get down to fairly small numbers. And so, I would say, long term, you can look at the 6.5 as being a contribution, but, in the interim period where we're still working through their deferred revenue balances and recognizing the revenues they've already billed, that isn't going to be reflected in our GAAP financials. I think when we get to the point of announcing certainly our year-end results and potentially, at a quarterly, we can probably begin to share some pro forma results in addition to GAAP that'll give you, I think, a lot more color.
Thanks, Todd. Thanks, Henry. Appreciate the time.
Thanks, Seth.
Thank you. The next question is from Tim Lawson from Macquarie. Please go ahead.
Hi, gentlemen. Thanks for taking my question. Can I just clarify with the new customers you called out, did any of those, or how much was the contribution of revenue in this half, or are they effectively a second half contribution?
I'll start with the general answer, and perhaps Todd will provide some more specifics. The general answer is that typically a contract signing has a delay between signing and launch. So those contracts, primarily probably Q2 signings, did not significantly affect the recognized revenue in the first half. Todd, sorry if I cut you off there. Go ahead.
Oh, no, not at all. Not at all. I agree with that. And I would just add that, these were enterprise deals, largely in the U.S., but there was a healthy mix from Europe, probably about a quarter. And, they were largely for well-being. Again, about a quarter maybe were engagement. These were healthy deals. And so, they aren't, immediately recognizable because there is a delivery period. And that delivery period really depends on the customer, the industry, the use case, the customer's readiness. It's not just Limeade that is, kind of driving to conclusion. So there is, there can be variability among those new customers. But, so you do wind up with this period where, or kind of scale of time where it's not immediate and it's typically not a year. It's typically in that 1, 2, maybe 3 quarters kind of time frame.
Okay, and just thanks for that. And then just on the direct versus indirect, obviously we're sort of calling out the channel impact, but how much is it as a result of the sort of size of companies that are being serviced by the different channels and the relative performance of the size of the companies rather than the channel?
Yeah, I think there's two things going on there.
Yeah.
One thing is we're certainly focused on. Oh, I'm sorry. Go ahead, Henry.
No, you go. Sorry, we're in different cities today, gentlemen. So go ahead, Todd, and I'll add on to what you say.
Yeah, I was just going to say that, the indirect channel is certainly still, a very solid opportunity for us. We're obviously we announced Viva. We're still focused on that as a source of bookings and revenue for the company. The particular channel that we're talking about is really a mid-market. We don't have a lot of touch or control over that customer. They tend to not be as strategic. It's, they're kind of just dipping their toe, so to speak, in the water. And so that business tends to be, very volatile. And we don't have an ability to really improve the odds of retention because it's really often the reseller that's controlling the relationship there. So, I would just say that we are redirecting our efforts and our energy toward strategic partnerships where we can drive meaningful and significant revenue while retaining more control over our customer. Henry, I'm sure you can add more color to that.
Yeah, thanks, Todd. That was great. I think I would start by saying one of the things that's driving a lot of excitement at Limeade, at our board, and in our company is having direct access to both the enterprise market and the mid-market. We like the idea of being able to sell directly, and Tiny Pulse helps us build that direct muscle of selling into the mid-market as well. That said, there are tremendous indirect channel opportunities out there too. We just have had to take a look and make sure that we're focused on healthy, highly strategic enterprise class partnerships that will have high levels of retention and expansion over time. So it's not so much a turning our back on all channel for all time. It's rather having a direct access to the mid-market and the enterprise and making sure we just are curating our indirect channel relationships to make sure they're highly strategic and have lower levels of churn, frankly, than we've seen in the last year through our existing channel relationships.
Can I just follow up? Have you made any changes in that indirect channel to the incentive structures such that you improve alignment, or do you need to do that?
We expect to have similar structural relationships with in terms of the financials of the partnerships, but definitely looking at different areas of growth. Todd?
Yeah, no, I would agree with that. In general, we want to forge relationships and partnerships where there's mutual benefit, right? Where each partner benefits, and there's an opportunity for us to both gain. And so, that'll drive kind of our alignment and desire for partnerships, I think, in the future.
Okay, thank you.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. There are no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you very much, operator. I appreciate your time today. Thank you all to the Limeade investors and supporters as we expand on our value creation initiatives going into 2021. We look forward to reporting out shortly. Onward.